Good afternoon, ladies and gentlemen. Welcome to our series of knowing mid-cap companies where earnings have gone higher than expected. And in that list of companies, we have today joining us Shriram Properties, where Managing Director Mr. M. Murali will be talking about the forthcoming plans of Shriram Properties. Good afternoon to you, sir. A very warm welcome on Business Today Television. I'll very quickly brief our viewers about the earnings that have come in and then come back to you, sir. For the moment, if you see Shriram Properties, first quarter profit actually rose 4%, 5 percentage points over last year's quarter to 17.5 crores, and sales were 14% higher at 154 crore rupees compared with 135 crore rupees in the year ago quarter. For March 2004, however, the comparison is a little difficult. 302 crores is what the sales were as far as Shriram Properties is concerned, in front of which we saw 154 crores coming in. So sequentially a bit of a disappointment, but net profit also sequentially fell to 17.5 crores versus 20.1 crores. Mr. Murali, namaskar, a very warm welcome to you, sir. How would you see the business environment for real estate players such as yours in the coming 2 or 3 quarters, and then we'll drill down to earnings?
Thank you so much for hosting us. See, if you look at the business environment, the first quarter had gone through some turbulence because of the general elections.
Yes.
And because of that, a lot of state governments were not functioning, and from the government side, there has been slow in decision making. Now the elections are over, and the new government has stabilized very, very well. Despite people had talked about initially the falling short in numbers and all that, but government has stabilized very well. And actually now the way Prime Minister has been taking the country forward, there is a clear vision for the next 5 years where the country is moving ahead. And infrastructure, manufacturing, services and real estate is going to have a big boost of growth in the next 5 years. We are extremely bullish of the growth what India is going to witness, particularly on real estate, and more particularly on mid-market and premium mid-market segment in real estate. As an organization, we are gearing up big time for the opportunity which is available ahead of us due to the great environment created by Government of India. In the last 10 years, they have created a phenomenal positive environment. Now, Prime Minister has taken the country to or looking at taking the country to the next level. So we are here to take this opportunity to build this organization to the next level.
Okay, fine. The company had actually launched an IPO in December 2021, and for the moment the market capitalization of Shriram Properties is about 2200 crore rupees. Compared with the top line, the trailing 12-month revenue of about 900 crores. The company itself makes mid-market and affordable mid-market premium luxury housing projects in cities such as Bengaluru, Chennai, Kolkata, Coimbatore and Vizag. Now let's get to the business, Mr. Murali. How many square feet in terms of million square feet did you sell in the first quarter compared with the same quarter a year ago, and how much is it higher in terms of average square price?
So if you look at the Q1 to Q1 comparison, this Q1 we had done about 0.7 million square feet, which is down by about 9% year on year. Last year we did about 4.5 million square foot for the full year. We are looking at close to about 5.5 million square foot for the full year. As I said earlier, Q1 there were lots of uncertainties. New projects could not get launched because of general elections, and first 2 months was gone in this first quarter. Also, seasonally, first quarter always remain weak for the real estate sector. Fourth quarter will always be, you will have the hockey stick model. So we are bullish and we are confident we should be able to take it to achieve our numbers.
I'm sorry, I missed the per square feet selling guidance that you gave for FY25. Could you please Repeat that number, sir.
FY25, I mean, as I have been giving guidance, the selling price keeps going up constantly because of the consolidation, what is happening in the marketplace, and also market is only for the larger players like us. So selling price keeps going up, and currently it's about 6,800 plus is the selling price. What we are doing now for the year FY25.
Okay, so 6,800 rupees per square feet is the average selling price. Could you tell me how much is the target that Shriram Properties has set itself in terms of selling a million square feet, the volume sales for FY25?
FY25 we are looking at about 5.2 to 5.5 million square foot is the volume we are looking at.
5.2 to 5.3 million square feet, am I right?
Yeah, 5.2 to 5.5 million square feet with a sales value of 2750 crores to 3000 crores, 2750 to 3000 crores. And the collections we are looking at about 1700 crores. And the handover, see, we handed over about 3000 units last year. We are looking at increase by over 10%. We are expecting 3300 to 3500 units to be handed over during FY25.
Okay, let me get this right. You are targeting a turnover of 2700 crore rupees for FY25. Am I correct?
Yeah, 2750 to 3000 crores.
Yeah, let's keep the base number 2750. This is compared with the
2360 last year.
No, last year revenue was somewhere like.
No, there are two things. One is sales value, other is revenue. Sales value last year was 2,362 crores.
Okay.
From there, we are looking at going up to 2,750 crores.
Okay, fine, sir. So that's the selling in terms of. That's the selling guidance in terms of revenue as well as million square feet. Now, Mr. Murali, let's understand new projects that are being launched. What is the number? Is it residential entry level flats that you're trying to sell, or are you going up the value chain? And any fresh cities that you're targeting, or will you remain in the catchment that you already are?
We have delivered so far in our product mix in the housing side, 67% of our delivery is in the mid-market and premium mid-market segment. We expect or estimate this to go up further to about 80% in the short run, and it can go to 90% in the long run. So more towards the mid-market and premium mid-market segment is where the growth is happening. And new markets, we hope to launch our project in Pune, first project in Pune in Q3, which was scheduled in Q1 because of approval delays. It is getting postponed. We are confident that we should be able to launch by Q3.
Okay. So first project in Pune to be coming in the October to December quarter, and how many million square feet will you deliver in the current financial year to residential people who have already paid you money?
We expect to deliver about 3,300 to 3,500 units.
Okay, 3,300 to 3,500 units. And in terms of square
Million
feet?
Square foot is about 3 to 4 million square feet.
Okay, let's just say 3.5 million square feet. And this is the price that you're talking about, 6,800 per square feet as the average. Am I right?
No, 6,800 is the forecast for the FY25. These are all the units which were sold either last year or previous years. In the last 2 or 3 years, it has been sold.
Fine. So, what would be the average realized revenue per square feet for 3.5 million square feet that you deliver today?
Should be in the range of about 5 to 5,200 rupees a square feet.
Okay, 5 to 5,500 rupees per square feet. Fine, that's very interesting. Okay, so you have one project that is coming up in Pune, and this year's target is something like 5.2 million square feet. What are the other new projects and new cities that you are trying to come up with, sir?
Currently, our focus is Bangalore, Chennai, Kolkata, and Pune. these four cities is our focus is fully now. We are not looking at other cities in the short term. But these four cities will fuel our growth comfortably with the inventory what we have today for the next 2 to 3 years time.
Okay, let's just see the debt on your balance sheet for the moment against a total outflow of it's 641 crore rupees. Are you looking to raise more debt, or is 641 adequate? Would you want to prepay some?
Our net debt is 482 crores.
Okay.
That's a gross debt is as of March, I mean as of June, is 610 crores. Net debt is about 482. And if you look at, we do not use borrowed capital to buy new lands. So we don't essentially use short-term capital for long-term investment. Any investment in buying a piece of land is considered as a long-term. So we are very, very conscious about it. We take debt only for the construction finance. The debt keeps coming down for the projects which are, for example, this 3,500 units when we hand over, those projects debt will come down. But the new projects, as and when we take up, the construction finance will be taken for those projects. It is just a working capital gap. So that's what we will do. Ours is one of the lowest debt equity ratio in the industry with about 0.37%. 0.37 is to 1 is the debt equity ratio, which is one of the lowest in the industry.
Yes, you have a very, very clean balance sheet. I give you that. And one of the cleanest names in the business when it comes to the real estate space. The stock itself is up, ladies and gentlemen, almost 6% today. And this is a very, very decent move that has come after a very, very long while. I think now you are at a record high. Yes, today's move shows that you're a record high. And this is marginally above the IPO that you had launched. I think it was at 120 rupees in
118 rupees.
Yes, 118 I remember. 118. So the stock is for a change now at 133, and it has taken it almost 30 months to be here. Again I say, after analyzing so many real estate companies, one of the cleanest balance sheets and one of the most excellent set of management you will get at Shriram Properties. That's a wonderful thing. Congratulations to your IPO shareholders. They've been waiting for a very, very long time for this kind of a price to come in. Mr. Murali, there is also some grapevine that an existing investor from the IPO time has sort of fully exited or is in the process of selling off his entire holding. Would you want to confirm that?
They all fully exited. We had 58%, close to 58% plus held by large institutional names like Starwood Capital, Walton Street Capital, Tata Capital, EPG. During IPO, they all sold some share, some of their position. Post IPO, over a bit of last 30 months time, they all fully exited now.
Okay. Fine. So it's a new set of investors that has come in, and it's brought a lot of luck to you. In terms of rising raw material costs, Mr. Murali, could you give us an idea about how operating margins will move, and how do you see them over the next 8-9 quarters when it comes to this crucial benchmark?
See, government has been doing a fantastic job in controlling the inflation. Also controlling the prices. So I would say we should give a lot of credit to government in managing this right balance. Well, on the other hand, we are also conscious about the potential increase in cost, prices for the construction materials, because India is likely to grow. My estimate is at least 8 to 10% year on year for the next 5 years. And I have no doubts India to reach 10 trillion economy by 2034, which means the higher growth, higher spending on infrastructure, which means there will be a bigger demand on the construction materials. Hence, there is a likelihood of price increase. we are factoring, we are conscious about in managing. We got a very strong procurement team, constantly monitoring where the prices keep going up or where is it likely to go up. Accordingly, plan our procurement timing so that we keep the cost in control. On the other hand, other positive one, our selling price also keeps going up. I've been maintaining this for the last 3 years time. Selling price keep going up. I expect that also to keep going up for the next 3 to 5 years time. So there is a right balance, and Indian consumers have become a little more wealthier or little more affluent compared to what they were about 4 or 5 years ago, and people have developed an aspiration to spend money on home buying. So there is somebody was looking at 2 bedroom, now they are looking at extra 1 bedroom. Somebody was looking at 3 bedroom, they are looking at extra 1 bedroom or extra little space because of COVID, and also the affluency what has come into them, affluence what they become now. So that's a position today, but overall, economy is growing, government has been doing the right balance. We also have the right team to make sure that we are able to balance this properly.
Mr. Murali, I think the market is also waiting from your end to launch a luxury project. You've mastered the art of selling middle income flats to very satisfied set of customers, but perhaps what the market is looking for and the new set of investors who have walked in is a luxury project from Shriram Properties. Is that in the pipeline?
No, certainly no. We are very clear about what is the market we should serve. See, if you look at the urbanization, what is happening in the country, the new influx of people who are moving into urban cities today,
Yes.
and also their wealth level. See, that they are our targets. They are mid-market and mid-premium segment. So that demand is likely to be there for the next 20 years comfortably. Whereas the demand on luxury will keep moving up and down. Today there is a good demand on luxury. I have no doubts on this. But you don't build a housing project in 6 months' time. If you finalize a land parcel and prepare a plan today, by the time the delivery takes place, it's somewhere between 3 to 5 years' time. Whether the market will stay 3 to 5 years' time robust, that there is no clear answer. Maybe now in a series of turmoil globally, the first one to get hit is the luxury market. So somebody pays 20%, 50% today, and they stop paying you in the next 2 years down the line, you will be struck. This is not the first time we have seen the cycle. We have seen the cycle. We know the advantages. Yes, it looks very, very interesting, but also it comes with some challenge. Whereas if you look at mid-market and premium mid-market segment, the aspirational home buyers, they need a home. Whether there is a war in Russia, Ukraine, or whether Trump wins or Kamala wins in the US, they need a home. It doesn't alter their lifestyle or alter their need. Hence, there will be a constant demand on mid-market and premium mid-market. Hence, we will continue to focus on that and deliver great value to those customers who have been extremely loyal to us. Loyal to the brand. As you see now, we just did our rebranding. We just entered our 25th year of celebration of Shriram Properties. We established their business in 2000. Now, 25th year we just entered. We thought we should also do a brand makeover. We changed our logo, brought in some gold, and connect to the current day consumer expectations. So, which we just launched yesterday, which has received a tremendous response. Day before yesterday, we launched day before yesterday. It has received a tremendous response. I have been getting lots and lots of messages and mails appreciating what we are looking at in our 25th year. So our focus, as I said again, we might change our logo, we might bring in a lot of boldness and very forward-looking one. But in respect of values, we will remain the most honest, transparent, highly governance-oriented real estate developer forever. we have been doing for the last 25 years, we'll continue to do for the next, whatever the period, 50 years, 100 years. So those things will not change. And also on the segment, mid-market and premium mid-market, we expect next 20 years there is going to be a constant demand.
Yes. Right,
It will not get affected, so we'll continue to focus on that.
With that, Mr. Murali, we'll take leave from you, and all the best to you in the coming quarters. We hope that the middle income segment that you so very strongly champion about works out very well over the next 20 years or so. Thank you so much for your time, and here's wishing you all the best for the coming quarters as well.
Thank you.
That, ladies and gentlemen, was Mr. M. Murali, the Chairman Managing Director at Shriram Properties, a small-sized realtor working out of South India. He has a presence in Bangalore, Chennai, Kolkata and Pune, launching a project in Pune in the third quarter, and has a target of selling 3,300 units to 3,500 units, which are being delivered this year, which is 3 to 4 million square feet. And they want to sell 5.2 to 5.3 million square feet in this financial year to March 2025. Stay glued to Business Today Television. There's lots more coming over the next 2 or 3 minutes on the other side of this break. Thank you for watching us.
The countdown to elections in Jammu and Kashmir has begun. With less than a month for voting, the National Conference and Congress have announced a tie-up. Both